Hi guys, welcome back to Reserved Investments on YouTube. So I want to take a little bit of time talking about the time value of money and how it relates to speculation in the greater antiques and collectibles trade. Remember, if you've been watching a lot of the videos on this channel, I talk a lot about opportunity costs and some of the hidden costs that I don't think speculators and unsophisticated investors realize they're giving up in regards to going after a lot of the more speculative items that are both on the market today and have been speculated upon in the past. And if you want more commentary on items that I'm referring to, like 1990s comic books, sports cards from the 80s and 1990s, Beanie Babies, Pogs, you can watch some of my other videos where I comment extensively on those speculative bubbles. What I'm going to do today is, this is going to be more of an introductory economic and finance devoted video. Some of you are not going to like this video. Others of you will get something out of this. I assure you though, if you just hear me out and listen to my viewpoint in this particular video, it should register with most of you, and you will have some comparisons to compare some of the so-called investments that you're making in the greater antiques and collectibles trade, and be able to compare those items and the value of those items to the greater financial markets as a whole. So this should be a fairly good video for most of you. So I'm going to get right into it here, and we're going to start talking about inflation. Simply said, all is what inflation is a general increase in prices and fall in the purchasing value of money. So as prices go up, your purchasing power that you have with the money that you already have is lowered because you're getting less products and less services for that same amount of money. That's all that inflation is. So let's talk about why this is important. Well, let's go back to 1987 when the Nintendo Entertainment System was kind of fresh on the scene. You know, the Nintendo Entertainment System launched in 1995, but it really didn't have mass market penetration in the United States until late 1986. That's when gamers were discovering excellent classic games like Metroid, Kid Icarus, Legend of Zelda. Super Mario Bros. 2 was announced. I think that was coming out in 1988. So a lot of the games at that time were sitting on store shelves, and most of them retailed in price for $49.99 and or less. Occasionally you would find one at a certain retailer that was $54.99. Well, for talking purposes, if we go back to 1987, I'm going to round off the cost of a Nintendo Entertainment System game at $50. So, if you had $50 to spend back in 1987, in the year 2019, this video is being produced September 21st, 2019, you would have had the equivalent of $112.92 in 2019 dollars. Because the rate of inflation from 1987 to 2019, on average, if you believe the government numbers, was 2.58% per year. So what that means, if you really spent $50 in 1987 on a video game, that's the equivalent of spending $112.92 on that same video game in 2019. So on a side note, we can kind of make an argument that those of you that are complaining that video games cost $59.99 today in 2019, well, it's honestly, when you factor in the cost of inflation, a lot less than what you were paying back in 1987, 1988, 1989, because you have to understand the time value of money and also inflation. Inflation is something that's measured by the government through the Consumer Price Index, and if you believe their numbers, I tend to think that a lot of the government numbers on the study of inflation are very low. They're more on the low end. However, it is accepted by most economists, so I can't really argue with these findings when something like this, using an inflation calculator online, utilizing the government's ratios, tells me that $50 in 1987 is equal to $112.92 in 2019. I really can't dispute that. What I can say, however, is if you're a video gamer in 2019 and you're complaining that the latest Nintendo Switch game is $59.99 and you were alive back in 1987, well, my friend, you were technically paying close to $113 a video game back in 1987 to what they're selling for today. So all things are relative. You have to understand that. Really, video games at their retail price level did not keep up with the cost of inflation. In today's dollars, they're actually a bargain compared to other forms of entertainment. So you have to take that into account. That's just a side note. Now, what I really want to look at, and what I really want to analyze, I talk a lot about financial investments on this channel in comparisons to the greater antiques and collectibles trade. Before I go any further, I have to put this out for the record. I do believe you can make money over the long term in the greater antiques and collectibles trade. Some of the commentary and feedback I get on this channel is that I'm too contrarian. I'm only contrarian against the speculators who are not using economics and finance to back up their findings. I'm going to give you two examples in a minute here that show exactly what I mean. So, one of the best investments you can make if you're going to invest in stocks or the greater financial markets, and again, this is in my opinion. I am not your financial advisor. I'm not licensed in anything. You're listening to a guy who's shooting videos out of his basement, much like Rudy with Alpha Investments or SM Pratt. You know, you can't take the advice that we give as factual and apply it to your situation because somebody like me doesn't know your exact situation. However, if you're just starting out in life or if you're at a time frame where you don't need money for the next 5, 10, 15, 20 years, one of the investments that has paid off tremendously for me has been an investment into an S&P, Standard & Poor's, 500 index fund, which is a collection of 500 of the largest companies in the either United States or across the world, depending on what index you invest in. And those companies have significantly delivered consistent growth, consistent dividends, and consistent returns over a specific track history in finance. So one of the funds that I invest in is the Vanguard S&P 500 index funds. Now, this is where the antique and collectibles marketplace differ from the financial marketplace. If you were to go and Google the 500 companies, or 500 and so, I think sometimes it's more than 500, that make up the S&P 500 index fund, you can pull up a list, okay? You can invest in an index fund that tracks all those companies, or you can invest in individual stocks in that listing of 500 and some companies that make up that index. In the greater antiques and collectibles trade, the one thing that you have to understand, there's no equivalent index fund or mutual fund. Now, what do I mean by that? Well, if you go and you look up the S&P 500 index fund and you come across, we'll use Iron Mountain as an example, okay? You want to invest in Iron Mountain, and I think Iron Mountain is at $33 or $34 a share right now, and it does pay a fairly high dividend because it's set up as a real estate investment trust, an REIT, a REIT, which means that 90% of the profits and income that that company produces has to go back to shareholders in the form of a dividend. That's an example of a company that you can invest in either through the use of an index fund, or you can invest in shares of Iron Mountain on your own through any online brokerage account. Well, here's the thing. If you go and you buy Iron Mountain and you buy 100 shares of stock in Iron Mountain, so you're going to pay, if it's $34 a share, you're going to pay what? $3,400 plus probably a $7 transaction fee to the online broker. You're going to get 100 shares of Iron Mountain stock. If that stock goes up to $40 a share, okay, you did great. You're making $6 a share. You're also getting paid a dividend on that money. Every 3 months, dividends are paid out on a stock like that. However, if those 100 shares of Iron Mountain stock that you bought at $33 or $34 a share go down to $26 or $27 a share, well, to be fair, you are still getting a fairly high quarterly dividend. So that's a plus for owning that stock, let's be honest. However, compared to the cost basis that you paid for those shares of stock, if you bought 100 shares at $34 a share, that's $3,400. If the stock drops to $27 a share, well, guess what? The holdings are only worth $2,700 versus the $3,400 you paid. Now, let's look at an index fund. When you buy an index fund, you're pretty much betting on all the companies in that 500 index fund. So rather than just placing your money in one stock like Iron Mountain, you're spreading it out across 500 companies. So your risk is much lower. You know, if something happens with whether it be Iron Mountain, Dow Chemical, whatever company you're invested in, if something happens where there's an accounting scandal or a product that's supposed to come out or hit the market or revolutionize the market doesn't do as well as the company expects, investors are going to react differently to that stock. Where if you're invested in an index fund, okay, you're going to have exposure to all these different companies across the board. As the greater economy expands, meaning as the gross domestic product, GDP, increases year after year, more than likely, the stocks that make up that index fund are also going to grow. And that's what's going to give you long-term growth. Another benefit to owning an S&P 500 index fund is that'll also pay you a dividend every 3 months. Now, the problem is, given the fact that you're invested in 500 companies across the board, your dividend isn't going to be as high as, say, if you put all your money in a stock like Iron Mountain or Dow Chemical. But that's okay because you're well diversified in that fund. Now, why did I just spend 3 minutes explaining index funds versus individual stocks? Because when we look at the greater antiques and collectibles trade, this is what some of you guys are missing. You can put your money in coins, currency, Pokemon cards, Magic the Gathering cards, video games, comic books. Here's one thing, though, that you have to keep in mind. There is no equivalent investment in the greater antiques and collectibles trade that is equal to something like an S&P 500 index fund. If you buy, even if you go into the higher end coin market, and you buy like an 1878 Carson City Morgan silver dollar in MS65 condition, and you pay $1,500, $1,600 for that coin, it's CAC stickered, the coin has excellent eye appeal, and you put it in your safety deposit box. There's no guarantee that that one coin is going to continue to go up in value year after year. However, you do have the benefit of being able to look up the price history of that particular coin for the past 10, 20, 30, 40, 50, 60, 70 years and seeing how it performed on the overall market to get a better analysis as to what it's most likely going to do, all things being equal, going forward into the future. If you put your money in 10 different graded video games, you may think that you're diversified. Well, here's the problem. You're not diversified because you're investing in the same collecting category and or marketplace for all your holdings. So if you have 10 graded video games, all of them are still part of the collectible vintage video game marketplace. You're not really diversifying. What I tell people to do, even if you're going to go into speculative markets, you cannot put all your money into Pokemon or Magic or graded currency, graded coins. Even me, I go after stuff, and I've said this in other videos, that appreciates over the long term. I don't mind holding stuff for 20, 30, 40, 50 years, and I like holding items that I can kind of forget about. So for instance, we go back to my example of an 1878 Carson City Morgan silver dollar coin in MS65 or higher. That's an investment grade coin. I can buy that once, I can put it in a safety deposit box, I can forget about it. I don't have to worry about too many changes in the greater coin and currency marketplace that are going to affect that holding. Or if I'm buying an item like Super Mario Bros. 3 for the Nintendo Entertainment System that's factory sealed and graded by Wada Games, I have to keep my eye or my pulse on the market because that's a very speculative market. That market can change in the drop of a hat. Or if I paid $1,000 for that game, and I'm just throwing a number out there, guys, okay, whatever it is. If I paid $1,000 for that game, it could just as easily drop to $500 as it could go up to $1,500. That's a little too much of a risk for someone like me who likes long-term investments and diversification, not only in financial assets, but also in the greater antiques and collectibles marketplace. So, this brings us to the original point that I brought up in the beginning of this video. If you took $50 back in 1987 and you invested it in the greater S&P 500 index fund and you allowed the dividends to compound, meaning you didn't take any of the dividends, they were allowed to compound with the principal. In 2019, in today's time frame, you would have $1,149.41, and you would have obtained an annualized return of 10% on average. Now, this is something that speculators don't understand because we also had a financial crisis in the middle of that time frame. From 2008 to 2020 to 2014, the market didn't really do as well as expected because of the financial crisis. So all things being considered, if you took $50 back in 1987, you plucked it into an S&P 500 index fund and didn't touch it. You didn't take the dividends. You didn't add any money to it. You just left that $50 there. In 2019, present day, you would have $1,149.41. So now I ask you, if you went back to 1987, what video games were you buying for $50 that you were going to keep sealed that were going to assure you that kind of return? Well, it's true. If you went back to 1987 and you bought a factory sealed Kid Icarus game and you had it graded by Wada Games and you sold it through Heritage Auctions, the one sale that we do know of went for $9,000. So to be fair to some of you, that $9,000 eclipsed the total return of the S&P 500 index fund from 1987 to 2019, which only returned 10%. So you are correct. Certain items will do better than the stock market as a whole. Here's the problem though. Most of the people weren't buying those items. That's why they're of the rare potential to supersede the gains of the overall stock market. This is what speculators are missing. Now let's say that you were a speculator back in 1987, and unlike everybody else, you had a vision where you thought all these video games that were coming out in 1987, 1988 were going to be worth money in the future. So you started buying up copies of games, and you didn't care what you were buying because you didn't know that The Legend of Zelda was going to be an instant classic. You didn't know that Mike Tyson's Punch-Out was going to be a classic because on the shelf along with those titles was games like Rambo and Ring King and Renegade and all these other kind of like third-tier video games that today we remember, but they're not truly classic to what we remember from the coveted Nintendo era. So let's assume that you spent $50 on a game like Rambo and you kept it factory sealed to 2019. I'm going to ask you, do you really think you're going to get $1,149.41 for your factory sealed copy of Rambo from 1987 or 1988? The answer is most likely no, even if it is Wada graded, guys. You have to look and understand finances and economics if you want to be successful in the greater antiques and collectibles trade. Now, if you're wondering where I'm getting these numbers at, you can pretty much Google S&P 500 reinvestment calculator with dividends. Through any Google search, you can type in the numbers and it'll tell you what that money would have been worth if you invested just that little bit of money in the greater S&P 500 index fund. That is today's lesson. You have to understand the time value of money. Successful investors in the greater antiques and collectibles trade use the trade primarily to diversify assets. They're not looking to go out and buy 10 factory sealed copies of Arch Enemy that was created for Magic the Gathering, thinking that this game is going to be worth $100 to $200 6 months, 2 years, 5 years, or 10 years from now. You know, some of you guys have caught on really good at what the reason for these videos when I have stuff on the table and stuff in the foreground or background behind me. A lot of these videos are showing you what you're not supposed to be investing in. This is all speculative stuff. That's why I keep getting comments in the comment section that'll say, well, show us more of your investment grade collection. Well, I can, but most of that is in safety deposit boxes. It's in secure climate controlled storage. In other areas of that realm, it's not in my house with me. So it's harder to show you guys those items from my collection. The purpose of what I show on the table in front of me and on the shelves behind me is speculative items. That's the whole point. It's just like on Nintendo Age. I have to laugh. People keep bringing up that I had something like this graded. Or where's the Dragon Warrior 4? The Dragon Warrior 4 that came back in 9.0. I never anticipated this to have value because I went and graded it. Yes, I have this listed on eBay. If you want to buy it off me, I'll gladly sell it to you. That said, I did it to check the grading scales so that I would know how Wada Games graded raw carts. Because I assigned this actually a 9.2 grade when I did my pre-grading on this item. I was surprised that it came back in 9.0. So now I have a better understanding, especially when I submitted this bad boy, as to how Wada Games grades this stuff. That's how you become a better collector and or speculator. And if you want to be an investor, you also have to understand market dynamics. That's what a lot of the people operating in these markets today don't understand. It's quite clear from some of the comments on message boards like Nintendo Age that I'm reading. Some of you guys are hitting the nail right on the head. You understand that this is just something you enjoy. You're going to put some money into it, and you realize over the long term, you're probably not going to get a lot of money back in the form of a financial return for buying some of these items. Other of you guys are kind of taking a cautious approach, but still speculating. You can speculate, guys. I speculate in a lot of this stuff. The understanding and difference between what I do, though, is I also understand the hardcore economics and financial data behind it. So I'm not going to go out and buy 100 factory sealed copies of The Legend of Zelda Ocarina of Time for the Nintendo 3DS, keep them factory sealed, and think that they're going to go up in value over the next 5 or 10 years. I'm able to analyze the market, and I'm able to understand that with digital downloads becoming prominent in the greater video game marketplace, along with items like this being released on a regular basis now, I'm able to understand that where the trend is going is not positive towards the long-term validity of physical media collectors operating in the greater video game marketplace. And all is what I said there, guys, was, sorry, I drew that comment out a little bit. All is what I'm saying is that if you're going to speculate and stuff like this for the long term, you're not really paying attention to where the trend is going. I did a video on limited run games that I'm going to also be doing a follow-up to, because a lot of other companies are entering that particular limited, speculative-driven frenzy marketplace with items of their own. For instance, we now have I Am 8-Bit. We have Strictly Limited Games. We have Play Asia, all releasing kind of limited physical copies of some of these games that a lot of you think are going to be worth money in the future. I cannot stress this enough. Very few of those games are going to have any substantial value in the future. In fact, let's use the calculator to prove this. If you're spending $40 on a limited run game in 2019, and you think 20 years from now, that game is going to be worth a substantial amount in the secondary market, well, let's compare it to what happened in the greater stock market from 1987 to 2019. If you put $50 in the overall S&P 500 index market in 1987, in 2019, you would have $1,149.41. Now, I know what you're going to say. Past performance does not equate to what's going to happen in the future. That applies to the collectibles marketplace. That also applies to the financial markets. That said, if we even split this in half, let's say that the S&P 500 takes a dive and only returns 5% per year over the next 20 to 30 years. Well, that $40 that you're spending on a limited run video game, that's going to add up to what? $600, $700 in that time frame? Are you really going to tell me that a $40 video game that you're buying in 2019 is going to sell for $600 or $700 20 to 30 years in the future? I'm sorry, guys. I don't see it. There's too many market dynamics at work in the result of digital downloads, I've already said it, consoles like this, that are changing the market over the coming years, of which even younger gamers, enthusiasts, and players are not being as attached to physical media as people of my generation, even as people like millennials, okay? The younger kids are getting used to digital downloads. They're not going to seek out a lot of this stuff in 10, 20, 30 years. They're not going to even want to buy a factory seal copy of The Legend of Zelda or Super Mario Brothers or, any of those games that we consider iconic. It's from our generation. It's not from theirs. And that's something that I think gets lost on a lot of speculators who are operating in the trade with a everything will stay the same within time mindset. That is false. That is a fallacy. I did a whole other video on the fallacy of speculating on modern era video games. There's nothing wrong if you want to buy 2 video games, you have your life together, and you want to keep one factory sealed and you want to play the other, just for your own enjoyment. That's fine, guys. I do that. There is a problem, though, if you look at that second factory sealed video game as a serious investment into the future. If you're doing that and you're trying to justify that reasoning to buy more of those items, you're not analyzing the market as a whole. That's the end of today's lesson. I hope this video has been helpful. If it hasn't been helpful, or if I didn't clarify enough points during this video, please leave me a comment so I can do an updated video on this particular topic. If you have any comments, any feedback for me, please leave them in the comments section. I do read all comments, good, bad, or indifferent. I also want to thank all my new subscribers. I really enjoy interacting with all you guys. I hope that you enjoy the content that I'm producing. The one thing about this channel is it's completely hype-free. I'm not telling you to go out and buy X and in 5 years you're going to have XYZ amounts of money. That's not the point of this channel. This channel is taking a contrarian view and looking at antiques and collectibles as a valid asset class. That's what it does. It teaches you how to analyze markets. If you're not getting anything out of this channel, don't watch. It's not for you then. If you are getting something out of this channel, let me know though, so I know to create more content and more videos going forward. Thank you, and have a great day.